For your journey, yes. You could join the Discord. I forgot about the Discord. Thank you. Thank you, Joe. Hey, Joe. How are you doing, Joe? How's it going, Joe? What's all right, let's see. Follows. What day is it? Is it the 6th? Is it the 6th today? Today's the 6th? Man, I got 5 follows in one day. How cool is that? How cool is that? What's my 8 follows in one day? Holy moly. Damn. I'm getting follows for usually I would think today would be the least amount of follows, and tomorrow will be the least amount of follows. The 7th here, we live in the future. Yeah, you live in the future. That's so cool. Night off from normal work, kids having a sleepover, hiding in my office, VibeCoding.
And they just
Yep. Make sure you token max. I token max so hard, I lost all my usage in less than 4 days.
want SpaceX to look good for the IPO so they can dump it. They have $100 billion at stake in SpaceX. And so doing this $1 billion a month deal, which was like, oh, look at the revenue growth. By the way, this deal, if you look into it, can be canceled by either party with 90 days notice. So it's a fake deal. That
oh man, that's 4 days from now.
Like,
you gotta chill.
A lot more money than we were before.
You gotta chill, man. Don't be like me.
You to get through this IPO. There is
don't have a day full unless you want to hang out with your family.
To try and put lips.
Unless you want to hang out with your family, like right now, just token max. Token max. It's like doing your homework. You token max, and then you can go back to real life again. Touch some grass. Have fun with your kids and family.
Stick on this pig because if it launches and flops, it takes down the whole AI trade with it. The entire enthusiasm and stock market mania is riding on SpaceX having a big IPO. Now, even if SpaceX's IPO does underperform, there is a silver lining for Elon Musk because there's a bit of a game of musical chairs happening right now. There's only so much investor demand, especially without the free passive income from retirement funds in the S&P 500.
There, pressure washer today. I'll visit tomorrow. Nice.
One chair.
That's awesome.
One chair. Okay?
You got to clean up everything.
Actually, there's 2 chairs. Let's say there's 2 chairs. And we have 3 major companies. We have SpaceX, which is launching first with their IPO. Then we have Anthropic, which confidentially fired the IPO prospectus to try and force it through. They're next up. And then, latest to the party, they didn't know it was going to go this way, is OpenAI. And Elon Musk hates OpenAI. So actually, as an upside to him, if SpaceX goes first, then Anthropic, and they don't do that well, the investor appetite for OpenAI will evaporate. They're going to go to the public markets and nobody will bid. I mean, it's going to be way under their expected valuation.
Predictions?
And because OpenAI is a...
Any predictions? I think similar to why people use Windows, OpenAI will do really well. As for all the nerds, we'll choose Anthropic, but it might not do so well. Mainly because since Anthropic doesn't target the global audience, like the normie, they're going to suffer. So they're going to be probably, even though their tech is technically the best technically, people will still probably put more money into OpenAI. I think it's just how the world works. Like that's the whole reason Microsoft is doing so well. Like I always thought Microsoft would like, I don't know, eventually not do so well, but it has its hands and diversified so many areas that what about Google Gemini for normies? I think OpenAI has been able to deliver. Google is okay too, but I think OpenAI seems to deliver to like on all avenues of AI compared to Google. But I mean, Google is raising money, which is so awkward right now, but it seems to be eventually going to be the winner because all the infrastructure for Anthropic is Google. most of the infrastructure is Google because they have the TPUs and not any other company has it. So it's like a really awkward, but Google just goes up anyway because just how Anthropic's just hooked up to them by default for everything. So is AWS. So like the real winners, honestly, is just the infrastructure providers and the electricity providers, because you need to use electricity to power up the data center. The data centers are owned by AWS and GCP and Azure. So yeah, they're the cloud providers are winning. I mean, they don't care who wins. They're the ones winning anyway. They just need to keep their infrastructure up. But Anthropic is having a really hard time trying to get that infrastructure set up. They keep going down. But I haven't heard much about OpenAI going down. Maybe I have. Maybe it passed my mind, but I've been mainly paying attention to Claude Code. And I hear an OpenAI news every now and then.
Company that is like always weeks away from bankruptcy, they need this. They need to dump on public markets. They are running out of cash. They've tapped debt markets. They've done 1 million rounds of circular financing. They need this IPO to go well. And so SpaceX, which can kind of tank it more, could end up killing OpenAI by having a bad IPO, which is crazy. Maybe that's 9D chess, maybe Elon's just an idiot. But all of this is why we are seeing some really shady moves, which is that OpenAI is now so worried about not being able to continue as a going concern that Sam Altman is going to the White House. In the past few days, Sam Altman met with Trump to discuss a government stake in the AI startup. If they can't get public market bailouts, they need literally a government bailout. They need to do what the government did for Intel, and they want to literally put this on the government paycheck. I mean, you're seeing this, you're like, fuck this, fuck Trump. But just understand that for Sam Altman to do this is a sign of enormous, enormous weakness. There is real jitters around this upcoming IPO season. We're at the end of the road for the amount of money they need. They burn billions of dollars monthly, negative, and they're negative. If they don't get this government bailout, it's like a big question mark. But of course, Donald J. Trump is excited about it. He might actually do it. So all this combines to a really hectic last few days in the markets. Now, do I think it's freak the fuck out and sell everything? No, I'm just telling you that the AI...
Yeah, guys, if this is like a financial bubble burst similar to the financial crisis, let's say, I could only imagine, guys, all the Fortune 500 companies overbill, overspend, and aren't able to pay OpenAI and Anthropic back. That's when it causes a collapse, guys. When that happens, it's all over. It's all over. Right? Because if everybody owes Anthropic money or OpenAI money and they can't pay it back, and OpenAI and Anthropic owe some other provider, they owe the cloud companies money, but they can't pay it, what's going to happen? It just creates a whole domino effect of nobody being able to pay each other. All right? Or they definitely want to rely on like the retirement money in the market to pay them. Curious. We'll see.
There's a lot more negative stories coming out, and the absolute mania is like tapering a bit. People are like, wait, well, let's ask some questions. Now, all of this is bad, but none of it is as bad as what's going on in South Korea. So I'll end with a little quick discussion of what's happening in South Korea. South Korea is every insane, degenerate thing you've seen in our stock market on steroids. The South Korean stock market is the most degenerate on earth. They have had absolutely insane amount of gambling, margin debt, just complete vertical rise. And recently, in the past 2 days, they had a worse down day than during March 2020, which is COVID. This is their 2-day loss percentage. And it caused a absolute wipeout in all Asian stocks. They had a total collapse. Now, it's been nothing but good green days for weeks there. And people have been buying basically into 2 South Korean champion companies, Samsung and SK Hynix. These companies make the memory that is used in AI data centers and AI chips. So they're extremely valuable. And SK Hynix 2X ETFs, which is like a leveraged bet on SK Hynix, have become the largest single stock ETF in the world, surpassing Tesla and Nvidia at their peak. People are making absolutely insane amounts of degenerate bets on these 2 companies going up. The Fear and Greed Index in Korea hit extreme greed. And then 2 days ago, it started to break a little bit. And half of the Korean population has a stock account, the highest level ever. And all of them, almost all of them, are using leverage bets, which means debt. There's trillions of won in leverage bets from average people in Korea, all on 2 companies. That does not end well in any world. So as it starts to unwind, there's a bit of like carryover panic from there over to the American stock market as well. There's an article about how streamer traders are becoming like famous, like K-pop stars, but they're calling it T-pop.
And then China invades
they have
Taiwan.
Like trading esports competitions.
That's not good either.
Trade stocks against each other on Korean streams. And yeah, the margin debt hit a record. So what's interesting is
that's World War III right there.
Who's buying and who's selling in Korea? These red days are from foreign investors, non-Korean investors. So basically, over the past, weeks of massive rise, it has been Korean regular families buying and foreign investors selling. So all the risk is being dumped on Korean regular people who are going crazy with speculation, and all the hedge fund investors are getting out. It's like a huge, literally, it's like set up for a massive financial panic in Korea if this goes down more than it already has. And so I want to zoom out. So this is all happening. This is all like the Friday news. By the end of next week, we could all be green again. I don't want to act like this is like, oh, it's all downtrend from here. What I want to say is the speed of this panic shows that there's like a lot of air pockets here. There's not like a strong, steady amount of demand. People are buying with debt because they expect it to always go up. And there's a lot of shakiness. It reminds me of the last scene of episode 1 of The Boys. What we're seeing on Friday is like the little bit of turbulence. It's not something you really worry about. It's the turbulence. Things go up, things go down. It's a little bit more shaky than usual.
Stock go up, stock go down.
What really makes people switch from extreme greed to extreme fear?
I hate markets so much. They're so disconnected with reality.
If you go from bad, then you kind of come back a bit, then it's bad again. That's when you get what happens here. Okay?
Don't worry about it, kiddo. It's just a little turbulence. Be okay.
That's 2 days, something up and down. Then we're back to green. We're back to green. Everything's good.
Oh my God.
And then the line goes red. That's the 3rd red week, okay? That's when everyone starts capitulating. That's when there's panic. Until then, it's all just noise. That's what's going on in the past way. I wanted to give you some analysis, and thanks for watching. See you on the next clip.
Yeah, the market is more like... not even Jeffrey Epstein could predict the market. Not even Jeffrey Epstein, guys. That's how much of a unknown the market is right now. And there's just so many factors that go in. It's really difficult to even understand what's going on. And the only people that profit from the market are the people that have money. And the market is really ran by only a few, stock trading firms, wealth funds, all that other stuff. Something that normies like us don't understand. Normies like us don't understand, guys. Michael Burry? Who's Michael Burry? Who's that? Ah, yes, The Big Short. Yep. The Big Short. The $8.4 billion bet. All right, what was his thing? What was his warning, guys? What's his warning? Isn't he making a big bet too?
This is a warning that Michael Burry recently sent to investors. If you've studied trading, you know exactly what happens next. He sent this along with a prediction of where he thinks Bitcoin is going, what will happen to Alphabet stock, Tesla stock, and what he thinks will happen to the market overall.
Now I think the whole thing's just going to come down. And it will be very hard to be in a long stocks in the United States and protect yourself.
At the end, I will show you where he believes the best place to invest is. But
Yeah,
first,
yeah.
let's start with his thoughts on Bitcoin. He tweeted, BTC
The
pattern.
one thing that I didn't consider is that companies will be overspending on AI and not paying back what they used.
The pattern refers to a graph.
But I'm trying to figure out it. Maybe people, the more usage the companies have, the more screwed over that these AI companies will get. Right? Imagine using 100 billion in token difference costs, and then OpenAI losing like 20 billion. Who does that hurt? AI companies won't let their customers die, go broke. They might. They might. If they need to survive, it's survival of the fittest. If you spend too much tokens and you gotta pay, and if you don't have the money, they eat you. Hey Lucy, I think this is what's gonna happen, guys. This is a weird prediction, but I think every company is gonna overspend in AI, and then what OpenAI and Anthropic's gonna do is they're just gonna own that company. They're gonna eat it up like the game Snake.io or Kirby. They're gonna like eat up the company that's their customers. They're gonna be like, we own you now. Oh, I'm dead. Yeah. Yeah, like me too. They're just gonna be like, you overspent. Now you're mine. And you owe me money now. Because you overspent. And you don't have the money to pay us back. These fools are reinventing the LBO with fucking token usage. Yeah. It's like their water and oxygen. That's wild, but still a valid take. Yeah. It is still possible. I think that's what the next financial crisis is there's going to be a bunch of people that won't be able to pay each other back, and that's going to cause a downstream effect on the whole market and everybody involved.
Bitcoin's price history. One stage back in late 2021 looks very similar to what's happening today. You can see the up curve.
You think there'd be a raise in token costs in the future, or will competition keep it in check? I think insane layoffs triggers it. I think token costs will decrease. They keep saying it's going to decrease over time. The layoffs triggering it. The layoffs are caused by interest rates. High interest rates remaining high. I talked to someone recently about business leaning on this to the point where they're practically leasing their operation, and that's very valid. Yeah, like guys, look what's happening. I can't even continue working on my product without AI, guys. Without AI, I can't continue working on it. What does that mean? That means in order to keep operations running, you gotta just keep paying for AI, right? It's an AI native company as a solo person, so you gotta keep funding the beast, keeping the beasts alive with money. Crazy, huh?
The peak, then you got the follow down to a support level that goes back up to another peak, followed by a decent collapse downwards. We can see something very similar that has happened recently. You got the two peaks and the downturn. So what does this mean? You would think that Burry is saying that Bitcoin will keep going down a bit, followed by a support level, and then a huge...
I don't like these analyses, guys. This just means that it's staged. If there's patterns in like how things go up and down, there's something going on in the scripting for the algorithm of the stock market. Makes no sense.
price increase in the future, just like it had done in the past. Well, he doesn't really think this.
I think Bitcoin at 100,000 is the most ridiculous thing. That same people are sitting on TV talking about Bitcoin. They're just casually, it's 100,000, it's down, now it's 98,000. It's not worth anything. Everybody's accepted it. It's a tulip bulb of our time. It's worse than a tulip bulb because this has enabled so much criminal activity to go deep under.
Yeah, guys, Bitcoin was the best money laundering medium to pay people and then extract it. And then at the time, it wasn't taxed, or like people weren't even considering tax for Bitcoin. It was insane. Now they put on their wrap, but still. And then now all Bitcoin is traced, so it's hard to, you know, get away with laundering now, I assume.
And he's right when talking about criminal activity.
I think some of that is definitely algo trading, but when it comes down to retail trading, I suspect it's market psychology that creates patterns. There's are really people out there depending on Fibonacci and retail markets. Yeah. They rely on all these common patterns too, as well, and they heavily rely on it. Crazy.
No matter what the orange-pilled, laser eyes enthusiasts will say, Bitcoin does attract criminals. When Colonial Pipeline paid its hackers $4.4 million in 2021, they paid in Bitcoin. When JBS, the world's largest meat processor, got hit that same year, they paid $11 million in Bitcoin. This is one reason why Burry thinks that Bitcoin will end up like the tulip bulb era. All hype, all mania, but not a very good asset that underlies it all. And if you know Michael Burry, you know he's not afraid to take high conviction positions when he sees opportunity. A platform that you can use to explore markets in a similar way is Plus 500. One of the key advantages is that you don't need to start with real copper, just type tweets warning Alphabet stockholders. And this tweet was all about Alphabet's plans to issue a 100-year bond, which would be the first tech 100-year bond since the dot-com era. Burry said, Alphabet looking to issue a 100.
I was hoping he'd talk about something involving the AI, right? Hopefully.
Year bond. Last time this happened was Motorola in 1997, which was the last year Motorola was considered a big deal. At the start of 1997, Motorola was a top 25 market cap and top 25 revenue corporation in America. Never again. The Motorola corporate brand in 1997 was ranked number 1 in the US, ahead of Microsoft. In 1998, Nokia overtook Motorola in cell phones, and after the iPhone, it fell out of the consumer.
Damn, guys. The iPhone, bam. The market reacted quick on that one. I thought he did for some reason, so I may have mistaken. No, he's talking. He'll be talking about it soon. I see it. I see it. Him talking about the AI stuff. We'll see.
Today, Motorola is the 232nd largest market cap with only $11 billion in sales. If you look at Motorola stock, it issued its 100-year bond in 1997. We then saw peak mania.
Isn't Motorola who really made the first iPhone with Apple? I have no idea. I have no idea. Gotta look it up. But it got me thinking, guys. If a frontier model comes out and it's better than everything, it will cause the other provider to go down dramatically because of how good it is.
And a price topping in March 2000. After that, we saw the stock drop over 90%, and it took 21 years to recover to that price. Burry is saying, essentially, that the same thing can happen to Google. It can go from number 1, or at least around that, to a mid-tier, largely irrelevant company worth a fraction of its current value.
Google is the value investor's favorite in that group. It's the one that everybody said, well, it's cheaper than all the others. It's got relative value, and it is Google. But I know that since I got ChatGPT and Claude, I don't use Google. Right. And Google search, the magic thing about Google search was how little it cost. Yeah. Because most requests were not monetizable. So for the 85% of searches they get that are not, nobody's going to buy, even looking to buy anything or think it's not product related. It's history, you know.
Yeah, now that I think about it, guys, who buys? I guess they buy it for searches. People get the first search term. Like if I search like AI guardrails, AI agent guardrails, I mean, most of these are sponsored results, right? And then you reach like here and down here. Maybe I need to add more, guys. I need more guardrails, AI agents. We need more guardrails. Prompts are not guardrails. Guys, I need to respond to this. I need to respond to this, guys. This thing appeared 1 day ago. It's showing up every time somebody makes a tool. I'll just say, I made a guard rails product. Let's see. Check it out at SigmaShake. How do I, let's see, how do I post? Let me make something really quick. How can, what? Okay. I'll go to here then. Sorry guys, gotta market my product as I still can, while I still can. I want to reply to a Reddit post involving AI agent guardrails. My product is SigmaShake.com. How can I reply without getting banned? Blocked. Reply to a post. Oops. Let's see here. Okay. All right. Got it. Copy. All right. Let's add this. See, one thing that I found building solution is that guardrails aren't just prompt restrictions. All right. See here. So all right. In public. All right. Let's see here. One thing I found building solution is that guardrails aren't just prompt restrictions. The bigger challenge is controlling the next growth. All right. Patterns that worked for me. Patterns that worked for me. How could I do tables? Oh, I guess got to do this. Ah! Crap. All right. Let's edit this too. Edit. I guess I gotta just keep searching my AI agent guardrails and just keep posting it. Let's see here. What else? Set permissions. Noise and skills for specialized agents, D files, separate planning for execution, review plan, less than 2,000. Compact, clear context, greater than 1,000 tokens. Add, approve, block, force, block force using hooks. All right, guys. Do me a solid and upvote that post. Upvote that comment. Upvote that comment, guys. Upvote that comment if possible. That's my only way of marketing, guys. If I'm able to beat this guy and link to, I just have to, this is what I have to do every day. I have to, like, every hour, I need to look for AI agent guardrails post. And schedule to do every hour, search for AI agent guardrails. If there is a post on Reddit, create a comment. Apply. There you go. Boom. Boom, boom, boom. All right. Maybe that's the only way, guys. The only way to break the algorithm is to beat the algorithm. Maybe, yeah. All right. Back to wherever it is that we're watching. Sorry about that, guys. Sorry about that. You got Gemini connected to your Google Drive? No, I don't.
What did Columbus really do?
Or do I? I don't think so. And if I did, it was to my SigmaShake email, not my personal email.
It's not monetizable. And so they better not lose a lot of money on that. AI changes that. AI is expensive. I run queries regularly that
You asked me yesterday, I said no. Yeah, definitely did I.
Tens of dollars just for my inquiry. One inquiry. Google had those searches down to infinitesimal fractions of a cent. Yep. So that business is the golden goose, and it's really basically all their cash flow.
Buri's main point is that when you have a golden goose for so long, sometimes you can get arrogant. You think you are the king. You lose innovation, and you think your business model is eternal. So you issue a 100-year bond. The Motorola parallel is the smoking gun. Motorola was the undisputed king of communications in 1997. Within 1 year, Nokia humbled them. Within a decade, Apple destroyed them entirely. The 100-year bond was issued near the exact top. But it is not just Google that Buri has a warning for.
Today, it's all passive money. And it's over 50% passive money. There's index funds. Less than 10% of money, some say, is actively managed by managers who are actually thinking about the stocks in any kind of way that's long term. And so the problem is in the United States, I think when the market goes down, it's not like in 2000 where there was this other bunch of stocks that were being ignored and they'll come up even if the NASDAQ crashes. Now I think the whole thing's just going to come down. And it will be very hard to be in a long stocks in the United States and protect yourself. And so that's why I decided to get out of it.
So let me explain what he's actually saying here. When you buy an index fund, an S&P 500 ETF, a total market fund, whatever, you're not picking stocks. The fund just automatically buys a little bit of every company in the index proportional to their size. Apple's big, so you get a lot of Apple. A random mid-cap company is small, so you get a tiny sliver. Nobody is asking, is this stock actually worth buying? The money just flows in and everything goes up together. Now that is fine, great even, when markets are going up, but Buri's point is about what happens when people sell. When panic hits and everybody starts pulling money out of index funds, the fund has to sell. Not just the bad stocks, not just the overvalued ones, all of them indiscriminately, because that's how it works in reverse too. In 2000, when the dot-com bubble burst, the Nasdaq crashed, but value stocks, boring companies, stuff that had been ignored during the mania, that held or even went up. There was a flight to quality. Active managers could hide in those corners of the market. Buri is saying that escape hatch doesn't really exist anymore. Everything is so interconnected through passive flows that when the tide goes out, it all goes out together. There's nowhere to hide now inside US equities. And he tweeted some clues on a few deeper reasons that can be the catalyst for the crash. He said in a reply to a Barron's tech writer, or the market is just jittery over historic overvaluation, historic capital expenditures, and tiny AI revenue. These points are all fundamentals with investing. Historic overvaluations means the stock prices are very high. Historic capital expenditures means these stocks are spending crazy amounts of money. And Buri went into detail on how this causes a market crash.
Yeah, so this gets to, what does this bubble look like? This bubble looks an awful lot like the dot-com bubble, which is not really a dot-com bubble. It was a data transmission bubble. It was a huge build out of fiber, and a huge fiber needed routers, and routers needed fiber, and it just blew up. So the market peak was in March 10th of 2000. Cisco grew 55% that year revenues in 2000, and it grew 17% in 2001 because the investment continued. It actually peaked for about a year after the top in the market. And so what you can do is you can look at net investment, which is capital expenditures less depreciation. All right. Over time, and you can put it against GDP to kind of a nominal GDP to compare it across eras. And you get these nice mounds of investment manias. And what you see in every prior one was the relevant stock market peak was before you were even halfway done with the capital expenditure. In the majority of cases, the capital expenditure hadn't even peaked yet. And so right now we're ramping up for capital expenditure.
And the last thing that he said was that there is tiny AI revenues. That means that the cash that they're bringing in return for this AI spending is minimal. Just from an investor's perspective, these are the opposite of what you want. High prices, high spending, and low revenue. Buri lets us know exactly where this puts us in terms of the market cycle.
Where are we then? I can't say because it hasn't happened fully yet. We are at levels of prior peaks. We're at the level of the shale revolution relative to GP. We're at the level, near the level of the dot-com.
I don't know, man. I only am skeptical because right now, not everybody is addicted to AI yet, but they're getting there. They're getting there, guys. And then when you're addicted to AI and you take it away, you just take it away. You're gonna be like so pissed, and no one's gonna be able to do anything. And then people will have to do stuff manually, and people will have to hire companies will have to hire people again instead of AI doing everything. So it's like a little weird dilemma, right? They keep the prices cheap and screw themselves over in the very beginning because they know people are going to come back. However, it only takes a person stepping outside to just stop being addicted. Or actually, Codex is doing the opposite. It's just going to be like, I'll do the work, just keep me on type of thing. Just keep my computer on and I'll do the work. But and then you can step away and do your normal stuff. Bray has made detractors that say he was only been right once or twice. That's true. That's true. He's keeping his relevance though. He's still keeping his relevance. They're still talking about him. It's been what, 20, 15 years, maybe 10, 6, yeah, 15 years.
When the the NASDAQ peaked.
So he thinks that the overall market will get hurt from this, but there are 3 stocks in particular that will lead the way. First, I will show you these, and then I will show you where Burry thinks the safe haven is. First, we will address Tesla stock, then Nvidia, then Palantir. Michael Burry tweeted, "Say what you want, but I am right. Tesla's market capitalization is ridiculously overvalued today and has been for a long time." He said this when the news came out that Tesla will be scrapping its Model S and Model X cars to build robots, which is quite an extreme thing to do. He said, as an aside, the Elon cult was all in on electric cars until competition showed up, then all in on autonomous driving, until competition showed up, and now it is all in on robots until competition shows up. The point that he is making is pretty clear. Tesla's story keeps changing and the fans keep following. Electric cars, self-driving, now robots. Every time competition arrives or exposes the weaknesses anew. This is the real reason why Tesla is worth everything, narrative appears. But for a business to be sustainable and actually worth $1 trillion, they need to have a sustainable business model and actually out-compete their rivals for a long period of time. Tesla currently makes $3.8 billion a year in profit, mainly from their cars. How many years will they have to make this until it justifies the price? And now let's address the Nvidia situation.
Palantir and Nvidia are the 2 luckiest companies on the planet. Neither produced a product for AI, but they're the 2 poster children for AI. Nvidia was a computer graphics chip. I actually knew the CFO. We talked in 2015 or 16. I went long the stock and I said, "Hey, you're doing a great job. I love how you're buying back stock." Nvidia they got lucky once with the crypto mining because crypto mining needed GPU. GPUs they weren't custom for crypto mining. They were just the thing that was there that could be used. And then AI came along and it's the same deal.
What Burry is pointing out is that Nvidia didn't design a product for AI. The GPU was built for gaming and graphics. It just so happened to be the right architecture at the right time. First for crypto mining and then for AI training. His argument is that Nvidia's dominance isn't the result of visionary AI strategy, it's the result of being in the right place twice, and the market is pricing it like it was genius. And of course, we know that he has put his money where his mouth is. He put a short on Nvidia stock, which means he will profit the more the stock goes down. And another stock he shorted was this one here. And I believe Palantir, he's even more bearish on.
Palantir was not an AI company. Basically, when ChatGPT came out, they basically put an AI cover on their applications they were selling and then selling all this consulting on, and they call it AI. But that's what every company is doing now.
He tweets it that, "I am working on something, PLTR. If you are a trader, you will understand that this is the classic head and shoulders pattern. It looks like a human body. You have the body on the left, then you got the left shoulder, then you got the head, then you got the right shoulder. And what comes after the right shoulder? Obviously, the rest of the body down."
Like, I feel like stock traders are becoming a little delusional. They have to create, I don't know, shapes, recognizable objects for the lines, the trend lines. It's silly. It's silly. It's always funny. Like the hockey stick, you know? Yeah.
This is one trading pattern that suggests that Palantir could crash. He put a support level around $80 and a landing level just over 50. With Palantir priced at 150, he's suggesting that the stock is going to go down in price. After all of the interviews and articles and tweets that I read, I could only find 3 places of where Burry actually recommended to invest, apart from shorting stocks. The first one was response to this guy's tweet who said, "JD, clearly I was wrong. JD will continue to go down and no one will ever buy them." But Burry responded saying, "Haha, but it is just getting good. Hong Kong on sale, exclamation mark." So that's the first area of opportunity Burry sees. See if you can catch the other 2 areas here.
So where do you hide with your money? Do you have gold?
I've had gold since 2005. I think, if you're going to buy something now, buy healthcare stocks. They're really out of favor. If you own something that has been gone up a lot, you've done really, really well in it. It's shooting straight up, and think it's kind of overvalued. I think that's something you should sell.
Yeah, that's it. Wow, that was just out of nowhere in the video like that.
corporate America is discovering a new way to buy AI, and it could change the whole trade.
If it's this really, really tough bug, it's something that engineers
Hey,
or
YouTube.
like put the best intelligence
What
on it,
stocks am
right?
I buying?
But for a lot of the
Hey,
work that you're
haven't
doing,
seen
what
you
we're seeing is
around.
you can get
Stocks that I'm buying? I'm already invested in all the companies that I worked for. All of the companies that I worked for, I just held, and I don't really buy stock unless it was the stock that I had to pay for to own shares in the company, whatever that I worked at. But yeah, I don't really buy stuff. Guys, I grew up poor, dead broke, right? I hold on to a lot of cash, and the real reason for that is just, it's just I grew up poor, so cash was always something I never had. But stock, wherever I worked, I just got the stock, bought it and whatever, and whatever they sold it to me for. But aside from the 401k stuff, I pick and choose, my 401k type of thingy. Like the typical blue chip stock places. Thoughts on quantum computers and AI? Quantum computers have a long way to go. I would say in 30 years, they'll be very useful. 30 years, they'd be very, very useful. Actually, might excel AI to be sentient at that level of usefulness. Right now, they're not useful, not in the next 30 years. Unless there's some breakthrough. Will quantum computing breakthrough for AI? Yes, it will. In 30 years. Just not now. Just not now. We don't have the technology. We have an energy crisis just trying to get up a chat bot generator, a code generator. Just trying to get a chat bot and a code generator to work. We're already having issues with energy and water. You think we're gonna solve like things with quantum? Like we have to figure out so many different issues first before we get into quantum. I'd say the first thing we need is nuclear fusion technology to solve the energy problem. And once we solve the energy problem, we'll have to deal with the data storage problem. And then once we solve the data storage problem, I guess that the compute of quantum computing would be somewhat useful. Because I can imagine like quantum computing would require a lot of disk space, a lot of compute, a lot of energy, and we haven't solved any of those problems. We're just researching it. At least that's my perspective of why. Guys, there's been companies working on quantum computing for the past 20 years, still not useful. Still not even commercially ready yet for anything. So until then, we just wait until something happens.
5 times better, 10 times better cost efficiency by just using models that
Thanks
are
for chiming in. I haven't seen you around.
Employees in the company use about $200
Thanks again for the
tokens
follow,
every week.
subscribe,
50 weeks a year. That's $10,000 in
likes.
tokens. You have 40,000
Like the
employees,
YouTube
that's
video.
$400 million. You have 90,000 employees. That's $900 million. There's going to be a concerted effort that the industry takes in saying, what do we need to do to make sure that these models are more efficient in token generation?
The AI trade, it's priced on the idea that companies will pay anything for the best model. That assumption, though, it's starting to crack. Here's what the people...
Yeah. The assumption, guys, is like the quality and what we're getting back. Guys, we did some calculations. Guys. Let me see. I haven't... let me show you guys. Damn it. Tokens. All right, tokens. We got last month, guys. I spent around 47.88 billion in tokens, right? So we got 300 million in, and then out is 453 million out. And then there's a calculation on how much were companies spending on Claude Mythos per million tokens. Oh, whoops. All right, guys, it was $25 per million input, 125 million output. All right, so if I took my amount of input and output, let's see here. How much is 453 million output? How much is 453 million output tokens? Right, that's not right. There's like this thing that for some reason I thought this is like more, let me see. There's cash input 5 million, output 53 million. Okay. All right. I guess my math was wrong. I thought we were spending like billions on it in tokens. But I guess I only spent 56,000 in Claude Mythos just for a month's worth of tokens, which I guess isn't that bad, but it's still pretty I thought it was more. For some reason, I thought it was more. I spent more.
Building and buying this stuff are seeing.
All right.
The old way of buying AI is pick the best, most powerful model, run everything through it, no matter the task. It's like putting your smartest, highest paid engineer on every job in the building, from solving the hardest bug to resetting passwords or checking the weather. The new way is to match the job to the model. Hard problem, send it to the top model. Easy problem or easy task, send it to a cheaper, faster model. The industry calls this model routing, and it is taking off. One company that sits in the middle of all this, OpenRouter, says it just saw its volume go up 5-fold in just 6 months. As its CEO put it, the era of picking one model is over. So why now? Well, simply, the bills came in. This week, Sam Altman said it's the first time OpenAI customers have complained about cost. He referred to customers that have been blowing through annual budgets in months. You've heard those stories. And it turns out, for a lot of everyday work, the cheap models are good enough. Run the top model, it costs around 25 bucks for a batch of output. Run a cheap one, that costs under $1. That is the trade-off that companies are making now as costs keep climbing. So routing, better efficiency, yes, that is great for the companies that are writing the checks, but follow the money. If the routing sends all the easy work elsewhere, OpenAI and Anthropic, they only get paid, mostly get paid, I should say, for the hard or the sensitive stuff. And the entire IPO story for both of them, it's built on endless demand and premium prices. Now, last week, we talked to Matan Greenberg at Factory AI, whose whole business is building that routing layer. Today, we've got another company going after the same problem, Cognition, maker of the coding agent Devin, which routes tasks across models automatically, tasks and agents, I should say. Today, they're out with a new announcement about what that AI...
Guys, this is what I think about task routing. I honestly don't think it solves everything. Like, the reason why I say that is when you do task routing and you route it to a lower tier model, that model will eventually run into a problem that it won't be able to solve properly. And so it will keep digging down the rabbit hole of making worse decisions. And that's why I myself just kept trusting the latest model to work on things, because I know they'll run into a problem and the model with the highest thinking, effort, intelligence will be able to solve it. But the lower tier model will just keep digging a bigger and bigger grave. So that's my take.
is actually worth to their customers and to them. CEO Scott Wu is here to start us off, and then later Cisco's Jitu Patel on what this looks like from inside the enterprise, where these bills actually land, the trade-offs that they're now starting to make. Scott, great to have you in person. Thank you for coming in.
Yeah.
Oh my God.
I told you before,
Guys,
I've
look
been
how
wanting
thick
to
his
talk to you
glasses
for a
is.
long time, ever since you had that demo video with Devin, and your inbox blew up. So
Yes. No, super excited to be here. It's been a long time coming.
talk
So
to me
overall, is not
about
a
what
good idea.
I'm calling this ROI guarantee.
I mean, I'm not a believer in open weight models, just from using them, but other people like them. For other people that are casually doing stuff, they'll gladly use Open Router because it's very, very cheap. But for me, I'm pretty seasoned in software engineering and security engineering, so I don't trust it or the routing to other models. It just doesn't make any sense to me. The harness already does it. The provider that I choose already does it, so I don't really consider anything else. That's just my opinion. It's different for everybody else, though.
You guys are calling it an AI productivity guarantee. I think it's so interesting because it's kind of like putting your money where your mouth is as a vendor, saying if you're not actually getting value, like, we're going to pay you for it.
Yeah.
Explain it first.
Yeah, for sure. Well, so you're totally right about, seeing the bills are coming in, spend on AI is getting higher and higher. And I think you see these kind of two polar ends of how folks are reacting to it, right? One is obviously people going crazy with it and using all sorts of use cases and putting tons and tons of spend and the bill going out of the water. And the other side is folks who are too scared and too hesitant about using it at all to even try anything or to like really.
Man, those glasses really magnify his eyes.
What's the right answer in the middle? I think the obvious
like really large
middle ground that you want to solve for is you want to know exactly how much you're getting out of all the tasks that you run, right? And if you spend $5 on a task, that's fine as long as you're getting $20 of output out of it. It's not okay if you're spending $500 to get that $20 of output, and so making sure that you're doing that well.
Okay, that's kind of the trade-off now, but I feel like for the last few years, a lot of companies have said, we want to use AI. We've heard about its promise, so we want to use the most expensive, the most secure. When I talk to a lot of like Fortune 500 companies, and I say, why don't you use an open source Chinese model? It's cheaper, it's almost as good. They say, oh, we're not going to use a Chinese model, even if it's hosted locally, right? There's just that stigma around it. So like, why do you think even the enterprises that have still to jump in are going to go or want to use model routing or even consider the cheaper ones?
So I think there's a few trends that we're seeing, and I think one of the important ones to call out is there are so many good models coming out, right? And so at this point, there's a time where if you were trying to run an agent, there's
I need to pause my YouTube and start it back up again. I've been streaming for too long. Way too long, guys. I have to like pause and start back up, I think. Let me see, guys. How long have I been streaming for? Are Chinese still doing well? DeepSeek? I've tried it. It doesn't look good. Wait. My stream went down and it went back up. So I've only been streaming for an hour? Huh. I don't remember. That's weird. I thought my stream has been up for like 12 hours. It shows that my stream has been up for 12 hours. I guess my thing did its magic and was able to restart on its own. Cool. Cool beans. Cool beans. I don't have to worry about it.
Now there's dozens and dozens of, there's a new release every other day.
Yeah, I was just using DeepSeek just now on.
There are all these different models.
I was using DeepSeek just now on Open Code, and it's just bad, so bad. So I don't trust it anymore. I'm just gonna turn off my computer. Actually, I'm done coding on my other machines. Save electricity. All right. I don't have, saved electricity.
You can kind of see their different strengths and weaknesses, right? The other thing I would say is folks are starting to think a lot more about mass automation of tasks. So we crossed this milestone with Devin, where just recently we got to the point where more than 50% of Devins are actually kicked off not by a human. it's kicked off by a Devin, or it's kicked off by an event trigger or something like that. And obviously, if you're going to do bulk tasks of, hey, like, let's take a look at every error message that came in, let's take a look at every report that came through, or every ticket, you naturally want to be able to run something that can support that much higher volume.
Right. Let's talk about a little bit more about like what you've done this week. One, you're doing agent routing, and that's just the ability to like put the best agents on the hard tasks, cheaper, efficient agents on lesser ones.
I think,
also this guarantee.
guys, I also think the harnesses are going to do this for them. The harness will route the task to the other weaker models. We already see this with Claude Code, with workflows and teams. It spawns like lower tier models for specific tasks. So you don't really need to rely on a company like OpenRouter to use cheaper models for tasks.
Did you feel like the guarantee to like prove the value was something you had to do? Was that proactive, or was that because you were hearing from customers saying like their bills are out of control?
It's something that we wanted to get on top of with folks, and I really do think of it as, hopefully kind of the path that brings things forward for both of the sides. We've definitely seen customers, a lot of folks who are very hesitant, and folks have heard the story of, here's how much budget I set, and I'm blowing through all of this, right? Now I have to be super careful. And obviously the answer is, well, you for sure want to be careful. You want to know what output you're getting. But as long as you're doing tasks that are giving you real output, then you know that you're getting the bang for your buck on that, right? On the other hand, obviously, to your point, we also have folks that are that are just getting started with it, that are figuring things out, and for them to know, what kind of value and productivity they're getting out of it is super important as well.
Now, ROI is like notoriously one of the hardest things to measure, right, in the AI world. So how do you make sure your customers, I know you're being conservative and you're giving them the benefit of the doubt, but we saw what happened with like tokens and Tokenmaxxing, right? If you allow someone to game the system, they will absolutely game the system. How do you make sure that like customers, and you're offering this to new customers, aren't going to do that with your guarantee? Just say didn't match the output.
No, absolutely. So it's the same as it is with with the human software engineer, which is you got to think about things in terms of output and productivity rather than activity, right? And so measuring tokens, to your point, I mean, you can spend billions of tokens and be doing nothing with it. On the other hand, if you're looking at, all right, how much code, what's actually getting shipped to production, what are the issues that are being solved? So all of our work measures as a function of hours of engineering effort, right? And it's a measure of, this is how much more capacity you're getting, this is how much faster your engineers are going, this is how much more you're able to ship, right? Rather than, oh, here's how many lines of code the agent produced, or here's how many buttons the agent clicked, because who knows what that's going toward.
How do you verify it then? If a company says, like, listen, we didn't get enough outputs for this.
Yeah. So we have our own model and our own systems. We've trained it on a ton of data from various different customer tasks that we've seen across the board, from the banks that we work with, health insurers, big enterprises across the board, and all of those map to hours. And so we have a conservative system where, first of all, if the agent doesn't do useful work in that session, it's a 0, right? So if that code that the agent wrote isn't getting used or something, that's a 0. If it is getting used, we do a measure that understands roughly how much effort that task took, right? And to call it out, it's like there could be a really, really hard bug to fix that could be a 2-line fix, but could save your team days of work or weeks of work, right? And a lot of it is really corresponding things to that actual engineering effort. And so, for example, like Mercedes-Benz, who's been using quite a bit of Devin, they saw a lot of tasks where migrations that were forecasted that were expected to take 8 months, they were getting done in 8 days with the help of Devin. And that's incredible ROI, right? As long as you're getting that, of course you should be using the AI for it. You should be doing these things. On the other hand, trying all these different sessions that are going nowhere, you want to be doing less of that. And so just helping folks see where they are and aren't getting that
There
value.
is this idea that a lot of folks tell me in the industry that like you have to go through that period of waste to get your employee base comfortable with using AI. Do you think that period's over?
So I think it really depends on different folks, and I think a lot of folks at this point, we're in that inflection where people are at different points in their AI journey. I think to your point, it's one thing, I think, as a human to say, just running tasks yourself, all right, here's like 3 or 4 things, let me see if it can do this, let me see if it can do that, and you're totally right that you know, at this point, I mean, there are a lot of these that folks don't even know AI actually can do that now, right? On the other hand, you know, it's a different thing to be setting up a, you know, a spinner that runs 50 tasks. And so that's more of what we're trying to avoid, rather than the like one-off, you know,
to climb a leaderboard.
Exactly.
Which also brings us to this idea of model routing, right?
Yeah.
I mean, if you have people experimenting and they're not doing like critical workloads, they can use a cheaper model. What would you say to a non-tech company that is like seeing these costs blow up, or even maybe seeing it on their margins already, and they don't even, like Arvin from Glean, he had this amazing stat when I spoke to him last week that 95% of enterprises he sees are still on the frontier models. Like, what would you tell these companies about model routing? Like, how would you explain it to them and why they should be using it?
Yeah, for sure. So you know, one of the things that we talk about in the industry is, you know, what folks sometimes refer to.
I also noticed another weakness in the model routing model is that the frontier depreciates the older models. Like, you don't see people still using ChatGPT 2 or 3 or, you know, 4.0 anymore, because they can't support hosting that model anymore. So the fact that Open Router is there to like route to weaker models, well, the models won't exist anymore. So what do you do about that, right? What do you do about that?
As use case saturation, right? And here's one way to put it. If you ask the AI model, hey, who was the third president? Every single model will tell you, you know, that it was Thomas Jefferson, right? It's not a hard question, you know, that there is an answer and there's a right answer, right? And I think for a long time, some of these more agentic tasks of, hey, build me this whole website, fix this entire bug, do this migration or version upgrade, people thought of as, okay, this is something that only the top 1 or 2 models in the industry can do. And now what we're seeing is obviously there are dozens of models that are able to go and do that, and naturally that means there's a lot of room to optimize on that price performance curve, right? And so I think as we see these models get better and better, of course, you know, if it's this crazy architectural issue or this like really tough bug that's been stumping your engineers for weeks, sure, like put the best intelligence on that, right? But for a lot of the boilerplate work that you're doing, what we're seeing is you can get 5 times better, 10 times better cost efficiency by just using models that are still good enough for that task.
How hard is it to switch? Let's say there's a company that's been, you know, signed up with Anthropic and using Claude for the last few years. How, like, what does that actually look like in practice? How do they go to a Cognition or Factory AI or some other party?
Yeah. Well, to your point, so that's a lot of why we think it's so important for us to continue to be independent and to continue to provide this way. You know, we think of ourselves, we work very closely with Anthropic and OpenAI. And
they're total pawns of OpenAI and Anthropic right now. Their whole business relies on the frontier existing and giving them access to the models.
Google and XAI and all of these, you know, independent providers as well, right? And to your point, it's, you know, what you see with folks is obviously it takes time to learn a whole new interface. It takes time to learn a whole new product experience and so on. But the ideal is you can have those models be routing and switching almost invisibly.
It's kind of commoditized,
you know,
though, right? If you have it in the background. But I mean, like for a finance department, how difficult is it to switch from Anthropic to something that gives you that optionality? Yeah,
no, it's a great question, and I think it's why more and more folks are in their commits are starting to think about, you know, okay, well, what do I want to bet on, and what do I want to commit on? And obviously, there's so many of these different models that, to the extent that you can make a kind of a neutral commit that will give you access to all the different providers, that just gives you a lot more optionality.
Now, whenever I talk about DeepSeek, there's a few people in the audience who freak out.
Yeah.
And because there's this sort of idea that DeepSeek isn't secure, even though you can host it, but still, I've actually heard legitimate concerns, right? You could say like some word that activates something in the model, even if you're hosting it locally. So what do you say to those same enterprises that have been resistant to Chinese open source models?
Yeah, for sure. So for first of all, I think there is a lot of value in, I think, really great American open source models. I think there are a lot of good teams that are working on that and pushing that frontier. And so even to the extent that you want to only be using American models, you can, and you can still have that mix of price performance. You know, to your point, I think what I'd say is like, with all of these things, it's really about figuring out how to secure things. You know, as models can make mistakes. That's true for American or Chinese models, frankly, right? And so the way that we think about it is, how do you have them work with all the same systems that a human will work on, right? And so, a human engineer could also make a mistake. And what do you do? Well,
That's
obviously
true.
you have a code review process, you have a QA process, you have a beta deployment, right? And all of these steps are intentionally meant to make sure that, if there's bugs or errors or things like that, that you will catch that early rather than having a single engineer dictate what gets shipped to production, right? It's the same thing here, where I think it's very important, obviously, to be able to run the models on American soil, which you can do, and that.
What is the context window of these huge commercial models? How does your user switch and retain context compared to the local models I run? So the commercial model use up to 1 million in context. However, most tasks should be, compressed and compact and cleared after 2,000 to 500,000 in context tokens. And how does a user switch and retain the context? I think they compact the context and then give it to the next model to work on. If I were to guess.
Already, I think frees up a lot of the anxiety for sure. But then it's just making sure you have the same guardrails and the same security guidelines as you would
no problem.
For any other employee. It really is an AI employee.
And something that gets kind of lost in conversations, like all the hyperscalers are hosting a lot of the Chinese models too. Just again, that idea of optionality. I also say that margins are like a powerful motivator, right? If you're going to blow through your AI budget in a few months, maybe you're going to give DeepSeek or Kimi another loan. Are you seeing that happen already?
So we're definitely seeing the mix of things start to shift, and I think there's pressures on both sides. I think the big labs continue to release more powerful but also more expensive models, right? And then on the other end, the cheap models continue to get better and better. And I think for sure what what you might call that price frontier curve, it's not just a single one point that you use for everything. It's several points, and people start to use and mix and match between these different.
I noticed, guys. I noticed the models are not getting cheaper. When a new model comes out, and it switches, the model just gets more expensive. It doesn't, and it takes more tokens. It's more expensive per token, and the price isn't going down. So, yeah, what's that gonna mean? We're gonna, and I noticed that our usage doesn't increase either. Only the rate limit increases, but the usage doesn't increase. Like we could see this from the trend of that I have tokens. I mean, let's see, for the first month, I had 2 accounts. And then the second month, I mean, maybe I got more usage, but only because they reset in the beginning of the week because they messed up. And so when they reset, I was able to use a bunch of tokens. But if they didn't reset, my weekly usage, I'd probably still be on the same trend of not increasing the amount of usage available, type of thing. So who knows? We'll see, guys. Cost. I was able to use $15,000 in a single day of usage. We'll see.
I believe this. There's always going to be a place for the frontier models. There's going to be critically sensitive work, nationally strategic work that you're going to want to use the frontier models. But do you think that model routing kind of dents their growth? They're going to grow. I get that. But do you think that because there's so many more options and it's becoming commoditized, that will hurt them?
Yeah. Well, Dee, I'm happy to go on the record and say I think the frontier labs will do very well. Actually, and I think there's...
Well, they're customers too.
Yeah,
So.
yeah. So I think a few things. I mean, As always, it really comes down to what are you getting and what is the bang for your buck that you're getting. And it is for sure the case, of course, that a lot of the think of it as a spectrum of difficulty, right? On the one hand, you have the super easy tasks, anything can do, basic one-liner, here's a spell check or autocomplete or whatever, right? On the other end, you have these like really, really hard tasks. And of course, it is the case, I think, that you kind of see that commoditization creeping, where more and more of these tasks are able to get done for cheaper and cheaper. But it's worth saying that those hardest tasks are also worth a lot, right? And
right,
so
absolutely.
if you can do the actual hardest tasks, and we'll kind of see that frontier of what counts as the hardest task continue to move, that continues to be worth a lot.
Yes, but they've been priced like they're taking every task.
Yeah.
And Arvin's point that 95% of enterprises are
Sure.
using them for hard and easy tasks to
Yeah.
check the weather, to
Yeah,
spin
yeah,
up
yeah.
a dashboard. So like, what does that mean for them?
No, I think
And
we'll
are they
see-
like, did they complain about you offering all the different models too? Because that hurts them ultimately.
So for us, we work with all of them as like a neutral, and so if anything, a lot of what we do is because we have all these real world use cases of, okay, here are the actual tasks that big engineering orgs around the world are working on, we can give you the results and the evals on how your models are doing on every single one of these tasks. We actually work very closely with them.
Right.
It's kind of a very nice like relationship in that sense. I think the no, I mean to your point, I think for sure that's the case, but I think we still have such a long way to go with AI. And if I ask the question in my mind of how many folks out there, I mean we talk about this all the time because we're here in San Francisco, right? But how many of the folks out there in the world that could be using agents to do their work are actually doing it? I mean, the answer might be it's less than 1%, right? And so that alone means there's just so much room to grow.
So like Jevons paradox, and the pie is just going to keep growing and growing for everyone, I guess, which is, that's something you hear often here. You said something a few minutes ago that I want to come back to. It didn't slip by. You said that's why it's so important for us to remain independent.
Yeah.
It is interesting that, I mean, Cognition is sort of one of these labs that has, great reputation. And we're seeing some of the other ones sort of get taken out, like Cursor, most notably, has this agreement with XAI. A lot of folks think that they're going to be fully acquired. Why is it important for you guys to stay independent?
Yeah, no, I mean, for us, it's, frankly, we think that being independent is actually the best way to be value aligned with our own customers. And we want to be able to point people to, here's where you're spending more than you need to. We're going to help you cut that down. Here's where you could be using this different model. We're going to help you use that, right? And I think as a, as a real transformation partner, when you start to talk about how are we going to 10x the capacity of this whole org? How are we going to make sure that every engineer can build 10x more and do 10x more, and then make sure we get the actual return from that? I think to some extent you need to be neutral, right? And that's how we've always thought about things, and that's where we always want to be.
Have you fended off offers from labs?
We've heard some, obviously, but look, it's honestly, I mean, it's not really been interesting to us because I think from our perspective, there's so much more for us.
He wants a bigger bag,
And
guys.
that probably says a lot about where
He
you
wants
think
a bigger
this is going,
bag.
right? The idea that there's got to be like a bunch of models to choose from.
Yeah.
And it's interesting because it feels like there was a few companies at the beginning of this modern AI era, like I think about Perplexity, that basically did model routing from the very beginning. That was a feature.
Yeah.
Will we see more companies do this? Is that a trend that's already growing?
I think we're going to see a lot more folks do this model routing, and I'm hoping that we're going to see a lot more folks thinking about these kind of productivity guarantees as well. And it's I think it's good for both sides, honestly, because folks want to be able to commit to AI. They want to be able
I think the hype was fake for OpenClaw, but the thing is, I guess I'm wrong. I mean, Microsoft is baking OpenClaw into their products, but everyone who's set up an OpenClaw during the hype couldn't get it working. They couldn't get it working during the hype cycle for the whole week, month. Everybody was using it. It was all fake hype, and it was super insecure. Everybody got compromised that used it, and it didn't really have much trust. Now they baked in a bunch of security practices, but it's still not enough. It's still, and that was at a time when you're able to use Claude and Claude Codex with it. But now that you can only use open weight models with it, it's sort of useless. It's sort of useless. It's been replaced by Codex Desktop and Claude Cowork. And then when Microsoft announced that they were adding OpenClaw, that was the biggest mistake they ever made. That was the biggest mistake they ever made, guys.
Yeah.
Not sure why they did that when there already is a desktop application. But they want people to use local models. The thing is, they have their little local models for like Mia or something like that for Microsoft. But they're going to have to work really, really hard. Really, really hard to get that working for them.
And you know, it shouldn't be on them to bear the risk of what happens if AI is not as good as what they thought it was or something like that, right? And I think you know, for us at the application layer to be able to provide that and do that, I think is just a win-win for everybody.
Okay, last few questions, bit of a lightning round, but I like to do this,
Let's
especially with people who are kind of like model agnostic.
Yeah.
What model are you using personally to do your hardest coding tasks right now?
Oh gosh, it's you know, I generally defer to Devin. I have to say.
So Devin chooses for you?
Devin will choose for me.
What's Devin choosing?
But often it's going to be for the absolute hardest tasks. It's going to be, you know, it's right now pretty much a 50-50, I would say, between GPT 5.5 and Opus 4.8.
Okay.
And so what you'll see is that for some of these like you know, reasoning tasks, if you're figuring out a bug or something like that, you want to use GPT because that's what it's typically better on. If it's like basically navigating a bunch of flows, doing its own QA and testing, we typically see Opus is better.
What was that ratio a few months ago?
It's a good question. I mean, I think it's a few months ago was much more in favor of the Anthropic models, I would say, at the time, and we've seen that shift a lot.
Interesting. Okay, your everyday tasks.
Yeah.
I don't know if you're using it to check the weather. It is a ridiculous proposition, but your everyday tasks.
Well, I'm like you, I think, where I have all the different apps, and so I'm subscribed to everything, and so I'll pull up all the apps on my phone and just ask all the, and I kind of like to play them off of each other, and you know, you'll see in their thinking chains that it says, oh, like, you know, if I asked it, hey, by the way, here's Opus's output, you know, I tell that to GPT. Can you take a look and see what you think about that? You know, you'll see the reasoning chain and says, hey, this is one of my competitors. Like, I gotta really look into this and see if there was something that was wrong here. And so it's kind of a nice, it's a fun thing to
you're
play them off.
distrustful.
Oh,
of me.
so just add
like,
it's
I have to check. What do they all say?
Claude Code's output.
Is that like the main ones here? Do you use Meta AI?
So I typically am using it, switching between Gemini, Claude, and GPT. Those are the three. Yeah.
Okay, the last one. I can't remember now. Usually I ask a last question on model usage. I guess, no, I think that's it. But you know what, Scott, it was so great talking to you. We covered a lot of ground. I know that you've got to run. Please come back again soon.
Yeah,
and remember, too, to our audience, that $10 million guarantee.
Yeah.
That's interesting. Who have you heard from after announcing that?
Oh, so I mean, we just put it out this morning, and we've gotten a ton of inbound already from that. As you
New customers, too? Is it a bit of a sales tool?
Both.
G2, welcome back. I think you're like our first repeat guest because you're so good.
Wow, I'm so honored. And I actually just snuck in over
I
here
know. Could you tell I was reading a little bit slower to give you some extra time to come in?
Customers come there.
Cisco president. Yeah. It's enough for me, guys. Guys, I think I'm gonna end the stream now. It's like this whole time, guys, I felt so drained because I have no tokens. I have nothing to pump me up. Nothing to pump me up, guys. Even if I have this music, guys, it's not enough. I don't have any tokens, guys. I have no tokens to power me up. I lost all my superpower. I'm super AI addicted and I have no AI. So, and the AI that I used all suck. I use DeepSeek, Neutron, all those other open weight models. They're all bad. They're all bad, dude. But yeah, I streamed for 12 hours. Catch me tomorrow. But I'll still be drained because I have no tokens, guys. Not till Monday in the afternoon. And even on Monday, you won't even see me because I won't be streaming. So until then, guys, you guys have a good night. Thanks again for watching, and we'll catch you tomorrow. All right? Bye, guys. Have a good one. Don't let the AI vampires keep you up, okay? Go to sleep. Or start your day. Go outside.